Why is the market so crazy right now? First, let's talk about the difference between now and 2008's bubble. So market correction or a collapse doesn't happen overnight. There are quite a few differences between 2008 and where we are right now. So real estate is less volatile than the stock market, but like all industries, they impact the stock market greatly. 2008 happened because people could not afford to own homes and they were over leveraged. I've been in real estate as a licensed agent since 2006. The industry has changed significantly. There are measures in place to eliminate over leveraging, tighter appraisal management systems, and even stricter guidelines when it comes to lending. A lot of people are comparing where we are in today's market to 2008 because of recency bias. However, if you really look at the economic history, people should be talking about and taking into account the years after the Spanish flu, considering we are on the latter side of the COVID-19 pandemic. Yep, I'm talking about the Roaring 20s, the decade that immediately succeeded the last global pandemic. The Roaring 20s was a time of change and migration, and we're in the middle of migration right now. People are heading to the South in droves. Over the past decade, Texas alone has had over 1,000 new people move here per day. Yes, that's per day. Yes, of course, the Great Depression followed the Roaring 20s. But there were a number of factors, all of which have checks and balances in place today. It was led by the 1929 stock market crash, but it was a perfect storm of banks closing and wiping out people's savings accounts overnight, overproduction of consumer goods, and underconsumption of those same goods. Okay, so let's talk about today. Why is the market so crazy right now? Well, like anything else, it's a multitude of reasons led by supply and demand. Economics 101. This demand is being created by lower interest rates, which give buyers more purchase power. Since we have the lowest interest rates ever seen, this in turn has created the highest buyer demand we've probably ever seen. Sellers are profiting because supply is short and they're getting multiple offers well beyond asking price in many cases. Some sellers are forced to sell because of their property taxes increasing, which in turn increases their monthly mortgage payment. And at this point, perhaps their mortgage payment is no longer palatable. So then those sellers become buyers. So going back to supply and demand, national home inventory is down almost 30% year over year and 57% here in Houston. But the national sales price is up 17% across the board. More people are staying home to work, which in turn means the utilization of the homes have changed. So people need bigger homes to support not only work from home jobs, but also homeschooling. So as far as Houston's future outlook, the inventory shortage will likely continue putting sellers at an advantage. Interest rates will likely remain flat or rise slowly at least through 2023. I don't see pricing falling off dramatically overnight, but instead I see a plateau here in Houston, which means this is our new normal. Houston is an anomaly. We have the largest medical center in the world. It's like a living and breathing organism. It's always expanding and growing. We have the largest energy sector in the world. These two unique sectors have so many ancillary businesses that need to service and support them that it's attracting blue-collar workers, white-collar workers, engineers, healthcare professionals, business owners, and business leaders from other parts of the country and the world. Houston is the fourth largest city by population. So think about this. New York City's median home sales price is $765,000. That's up 7% year over year. And Los Angeles is over $900,000 as their median sales price, which is up 23% year over year. While Houston is up 23% from last year, it's still only at $289,000 as the median sales price. So it hasn't even cleared $300,000 yet. When you consider mid-sized markets like San Diego or Phoenix, those markets are also up near or over 20%. And I can't fathom how they'll sustain. That almost feels like FOMO buying or speculative buying. I would imagine pricing falling there at some point, but Houston can sustain and support and withstand the increase in pricing because we have jobs, major employers, and the heartbeat of two major industries. So if you're on the fence and trying to wait until pricing trends fall backward, unless you're expecting a serious pay bump, I don't think waiting is a wise decision. You may find yourself waiting until Houston home prices mirror those of New York and LA. Listen, if you're serious about exploring, selling, purchasing, or investing in real estate here in Houston, give us a call. Let's talk. I'm applying for the job of being your realtor.